Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Thanks, Marty. Thanks, Disconnected. Moonwalker, appreciate it. And how we doing in YouTube this morning? All right, thank you. Well, good morning, everybody. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by today. I stream live Monday through Friday, 11:30 to 1 p.m. Eastern Standard Time. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. It's not a trade calling room. It is really based on structured trades that you can reverse engineer, and also the idea of a community that has come together to leverage their collective experience in order to build something better. The business of trading is built on gaming processes or gaming theory. That means statistical probabilities versus predictive probabilities. And the difference between prediction is trying to develop certainty, which does not exist in a random environment. So instead, if you can accept you're in a completely uncertain environment, that will give you potentially an understanding of the environment that you operate in and what you need to do to manage your emotional and psychological states, which are not aligned to operate in this environment. That's what makes it so difficult. So even traders that might have a viable process fail because they don't understand even the environment they're operating in. They take the environment that they think it is and base everything they do on a belief that might not be in alignment with the business. So the Trader Lab is established to help traders understand the business of trading, how the market works, why it does what it does, how you might get involved in it with a statistical edge, and then be in a community for support. I hope you find that useful, and if you're interested in the Trader Lab and what we do, you're all invited. There's a link in the bottom of YouTube. There is no cost. Now, grab a pen and a piece of paper. We're going to get into some stuff, and I have an announcement, of course, for you, which I think is pretty important, so you're going to want to make a note of that, too. General disclosure. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of losses. It is not suitable for all investors. Past performance is not necessarily indicative of future results. Please grab your pen and paper. I'm going to give you a couple of notes. I'm going to show you a couple of charts, and then we'll get into how the market unfolds as it did this morning. Very interesting day. And remember, this is not a trade calling room, but if we get into real time, we'll talk. Now, one little piece of business to take care of, actually two. First of all, our Funded Trader webinar series. This is happening right now. It's going to run through the rest of the week up until Friday. It is in Discord only. You can learn tips and tricks of what the pros use all week as far as how can you participate in a funded account? What are some of the tricks? What are some of the pitfalls? How might you better navigate it? And this is exclusively in Discord. If you're visiting in YouTube, by the way, please give a like or a thumb up and post comments. Also, there's the link in the bottom of YouTube if you want to access the Bookmap Discord Trader Lab community. There is no cost. And also programs like this that are exclusively in the Bookmap Discord server, and a lot of additional education, all available at no cost. In addition, to give you an idea, in the Bookmap Discord Trader Lab community, there are 60 PDFs of these structured trades, many of which I share here in the stream, that you can download and reverse engineer in order to attempt to develop an edge for yourself. Remember, gaming community. Gaming is casinos. If you're in a casino environment and you want to be the house versus the gambler, then you only play games that have a statistical edge. You understand you don't control the cards coming out of the deck or how gamblers play the cards, but you do control how you play the game. And the only way you can extract the dollars over time in a random, uncertain environment is by only playing games that have anchored inputs and have a statistical edge. All that's built on some of this, and you're all welcome to it. Use the link in the bottom of YouTube. You'll find this interesting. But of course, past performance is not indicative of future results. These are real trades and others are screenshots. Some of this is work I did with Bookmap developers on some ideas that I had. And some of those have been incorporated in some of the tools that you now see in Bookmap. This is from 2020, so it's been a number of years, but this is what you're going to be seeing. Now, TraderLab is more advanced than what you're going to see here. I consider it like an advanced degree in trading. So let's take a look at auction market theory. Now I'm going to give you statistics, but I have to show you a picture. What do they say? A picture paints 1,000 words. Now, when you look at this, your eyeballs are going to roll back in your head and you're going to run for the other direction. I understand. But what is the market all about? It's really what's too high, what's too low, and trying to find a price that's fair. So the market goes to extremes. If you remember, we had a gap and a big sell-off Friday, I believe it was. Yes. And this was our target, 78-ish, 78 and change was our target. And that's right by the low of the day on this day. Now, yesterday, now this is going to be a little confusing for you. So think of it this way. In this whole consolidation, all of this, and I think this is October 9th, maybe to October 31st, can't remember. This is the highest volume. If you considered that the market is a shopping experience, it's not a predictive one, why might the market come to a level and then test it? If you think of this like shoppers, I'm not paying that. Yeah, but it's on sale. And then we do this rotation. And in all of this, this is where we're trading over too low retail. Now, if I gap up, and this is off the election and everything else, and all the party hardy, and then gap out of that consolidation, where was the last retail price in the intermediate time frame? It was right there. Okay. Now, what happens yesterday? Inside day. Now, what is an inside day? It's two sides battling, and it's really what it sets up is a coil. So what you have is buy stops up here, sell stops under here, and we're going to come out one side. Now, we don't know when, we don't know anything. This is part of the thrill. But let's write this down. 59.20 in this consolidation is the retail price. Also, in yesterday's RTH, 59.20 is called, and write this down, 59.20 is a naked volume point of control. Use a NVPOC, naked volume point of control. 59.20 is also something called a micro composite volume point of control. So it's fractal. So yesterday's high volume was there, and the high volume for these 2 days is also there. Think of it like a magnet. Now, coming back down here, this is the highest volume for this region. It's a magnet. So you got a magnet here, you got a magnet there, and there's one other magnet. The ETH volume point of control, got to find it here, fell off my chart, or it's buried here. Hold on a second, guys. TraderLab, where is the overnight volume point of control? $93? Can someone confirm that? $58.93, is that correct? Yes. Yes, thanks, Marty. Thanks, Lycopane. Okay, write this down. $58.93. What is $58.93? It is the highest volume in the ETH. So let's take a look at a couple things here. We open lower, we gap, right, out of yesterday's range. On news, where do we go? Here, high volume node. Where do we come back? Here. Now it's going to get even more interesting, because if we get above here, we have the possibility to get to the ETH high, yesterday's high. ETH high is right up here, by the way. And I'll show you those in Bookmap. And then even the possibility to get above here. And when I say to go all these places, it's just auction. So the beauty of the auction is, if this is too high and we have buy stops here and buy stops here, we can come out here, and maybe not today, maybe not tomorrow, maybe never come here. This is the auction market theory. Now, you say, really? And I'm going to say, yeah, really. Let's take a look. Now, okay, this is the RTH open. Remember, yesterday's low and the ETH volume point of control. What is below us? 78. Remember, I'm just giving you the same numbers. Let's watch the behavior. So, what are our first trades? Well, it looks like we're falling off the ledge of the planet. So initially, we're going to be looking for shorts. But how do you trade when you open here and you've got support and maybe the end of the universe? In other words, if we fall under here, we have the ETH low. It's a high probability target. Now, you do write these numbers down, but when you open lower outside of range, gotta find it. Overnight low has a 70% probability. Write these down. The overnight volume point of control, and I'm giving you stats because this is what TraderLab is built on. Statistical probabilities, auction market theory, and then wear a helmet. The overnight volume point of control, which is the highest volume from the last auction, or ETH, is 85% probability. The overnight low is 70% probability. The overnight mid, 68% probability. I'm opening here, don't forget. Taking out the first hour high or low, a 97% probability-ish. Taking out the first hour's high, 67% probability. Interesting, isn't it? Taking out the previous high or low, about a 64% probability. Taking out the previous low, a 64% probability. That means filling the gap. Getting to the previous settlement, about a 43% probability. And let me see, where am I? Okay, I'm just checking my positions here. Sorry, guys. And the previous point of control, 31% probability. Where is that? 59.20. Remember? Target. Okay, so you got some numbers. Is everybody tracking? How are we doing in YouTube? And how are we doing in the Bookmap Discord Trader Lab community? By the way, YouTube, if you're interested in the Trader Lab and also the special series on becoming a funded trader, which is happening this week, click the link in the bottom of YouTube, access the Discord channel, and then confirm your email, which you need to do so you're not a spammer. And come on in, the water's fine. And also don't forget to visit the Bookmap Discord Trader Lab community. There's no cost for all of this. Okay, so RTH open right here. Now remember our levels. Overnight volume point of control, and down here, 78. Key levels. Remember the chart. If you're a little late coming to the show, of course, if I can find what I'm trying to show you. This is what it looked like before the open. 59.20, and here's the level right here, 78-ish. So what are we looking? And the overnight VPOC at 93, which was right around here. So you have this to go short, this for a test. We get under there, back to here. Just saying, 58.60. You'll see them on my book map. If we come under here, come back above, then we're coming above the 94, and then we're coming here. So now, just to show you what did happen, so that's before RTH open, and here's what did happen. We tested under here. So I'm sorry, first we went to 93. You'll see where the open is. Tested down here, tweaked it a little bit, came back above. Then this could be, when you're in here, it could be two-sided trade. Get back above here, sets up along to there, and possibly we're looking for this, but that's another conversation. So this is where we are now, ish, and that's where we were just before the RTH open. So now Now that you know all of that, let's come back to Bookmap. So, microcomposite volume point of control, ETH low, overnight volume point of control, 82%-ish probability, and etc. going up the food chain. So what do? Watch. Now, if you're in the Trader Lab, you would know where your levels are. What we don't know, and nobody knows this, is how, if, when, where. We don't know. So I'm looking at this, and I'm thinking, I think I want to get short. But I have to be very careful because where's my location? I know I can fill the gap, yesterday's low, and I know I can also just gap and jump out the window because we're gapping under yesterday's low. And if I get under this, I've got this, and I've got more down below. So I'm thinking I have to be aware of both scenarios. I open here. Now, this is what I see in the short term. This is called VPOC migration. I'm not going to spend that much time on it today. I think I've done many webinars, even one specifically on VPOC migration. So if you follow this stream, you've seen this all before. So I'm going to do just a little different today. So this is called VPOC migration. And what it is it's saying that this price is too low in the moment. And it's literally in the moment because this is an auction. And when the volume and the price are moving together, it is saying too low. I come up here and I break below here. That's saying maybe too high. So now I rotate down. So I know this is maybe too high. This might be too low. I'm going to label these. I have to label them because this is how I trade. And the reason I label them is because the auction is really language. It's not an indicator-based process like most retail traders want. Show me the red light, give me the green light, and just click. I'm going to suggest there's a little more to trading, or maybe even a lot more to trading than that. Otherwise, everybody would just get indicators, time frames, and have an ATM in the basement. Why doesn't it work out that way? Ask yourself the question. See if you have an answer. So, too low, too high. Come across. What this is suggesting right here is it's too high. But what do I know is too low? It's right down here. Let's watch the behavior. Everybody following? Notice the behavior. Why did that happen, you're asking me? If you want to see how this might work. See this? Now, what's too high? Up here. I'm going to put a little line here. So what I know is I have my overnight VPOC above me. I've got this target below. And if I get under here, we could have a wonderful day on the short side. So let's watch. VPOC migration. What does this tell me? Too low, potentially too low. Break here. Now right here, if I clear this, and notice what we see about the VPOC. It's moving higher. That might mean that what's below me is too low, and now I'm going to potentially migrate higher. Notice where we come. Variable high volume node. One moment here. Got to pay attention. Okay. Let's watch in the market here a little bit. Okay, too low. So let's look. Too low. See, I can't help myself with VPOC migration because this is the auction. Too high. Too low. Where's too high? It's there. Too high. Break. Now, watch this. This is advanced concepts. And guys, this is advanced trading. This is not the line crossing over the line kind of thing. This is really an advanced degree in understanding market mechanics. The market tends, if we accept that, why do we have a market? It's trying to figure out what's too high, what's too low, and what's retail. So it moves, all over. So if I know the retail price might have been too low here, and it doesn't mean that we won't take it out. I mean, there's no magic. By the way, I am holding along, which is not a recommendation. Why? statistics. Just saying. We'll get to those trades. And these are Trader Lab trades. If this is too low, watch. Now it moves up. This is too high, resistance. This is too low. And if I come across, this is becoming support. It is right at that high volume node. I'm going to mark it just so you could kind of see the progression of this. I break high. So too low. Here, what's this? I break above it. Potentially it's support. I'm going to mark it. Now it's maybe. Remember, I say maybe because that's all you got. Maybe this is too low. And if I break above this, which is here, and can get above this, which is here, it is support. Absorption. Break high. Where's support? Here, right? Here. Break high. Where am I trying to go? Overnight volume point of control, fill the gap, yesterday's low. So here's the deal. If you were into longs, you would have a long to there. If you're thinking shorts, then you'd be looking here after filling the gap and getting to the overnight volume point of control, 85% probability. Past performance not indicative of future results. You got to vet everything. And a 68% probability of getting there. So right here, I'm looking at this and I'm saying, well, if I can't get above this retail price, and there's no precision in this, and I filled the gap, then what? Maybe a short back to here. So 2 trades, a long, and this might not be your trade. You might not even take this trade till here, and you're only going there. Or you said, I don't have a long, I'm in the middle of nowhere, and now you're looking to see what happens here. Do we go right through, or do we find our sellers? Let's see what happens. Why would that happen right there, you're asking? It's happening there because it was the retail price. Think shopping. If this retail price is too high, because it was the highest volume price in the ETH, and in the micro developing structure, this one's too low. Now, whether or not you want to get involved in here, that's up to you if you have an edge. For me, well, it doesn't matter what I do. Let me just say, this is, if you're in Trader Lab, the better place because now you have something that was established in the last auction with an 85% probability. It's right there. And you fill the gap. So when you gap low, we often fill gaps and we have a statistic, 85-ish, whatever it is. Yeah, 85%, and you have to vet that. So let's look at the short. Chop, chop, chop. It's a consolidation. Let's watch it. So right here, we're at our level, and I'm seeing, what do I see here? I see my buyers. I see my buyers, but I'm not seeing them get any traction. I have buyers here, and I have a sweep here, a buy sweep. So this sets up the sweep and the absorption up here, which I don't know until hindsight. I hit my statistics. I hit statistic, overnight mid. I got everything that's close by. So let's look at this. So this is the high volume in this structure. You can see it. Let me just bring this down for you. So you can see this. Well, I can open this up for you. This is the beauty of Bookmap. I can open it up and really get down into the nitty gritty. Overnight VPOC is here, retail. Microstructure right here, that high volume is the same thing as that, except this is called a fractal. You guys think of time frames, and I always have to bring this up. Time is not part of this. The clock has nothing to do with the behavior. So coming up, this is a target. So that was my target. Then we pull back. So I'm now looking for a short. If I take a short here, my stop's got to be out here. This is the better structure. If I put a short on here, I would take a stop, no problem. other than how I feel about it. But it's just overhead and cost of production. I come out here. I now have my trigger right here. Watch. So I have my volume there, fractal, think Russian dolls. This is all it is. We're inside of each other here. High volume happens to be there. The high volume from the ETH is there. I have overlapping volume. Now, chop, chop, chop is a consolidation. Well, watch. Break. Where did I break out? Here. Yesterday's low. What's too high? This. So let's watch. Let's look for our short. Here's a selling structure, micro structure. So let's look. The ideal location would be here, and your risk would be over here. So let's look. You come up here. We don't get there. Okay, I'm going to draw another little line here at the bottom of this. I'm going to try to draw a line. And what this is the outside of this consolidation, which is marked from there. So now you're going to see this is price action structure. So I'm looking, for short. Now, here, I don't have a good location because I'm right here. I need to be further outside because what I'm going to try to do is come back inside, and it's called mean reversion. This is in the Trader Lab, and we also joke in Trader Lab, yeah, it's out in here. So this is an outside edge. I just know it's out here. So right here is micro high volume. Let's look at it right here. So, and what's up here? Micro high volume. So break here, break. Right here is an area to look for a short. Your resistance is there. So here, if you get the chop chop, you have your high volume. Let's just follow this. I'm going down in time frame, no time, but fractal. Here, this is resistance, and that's resistance. And by the way, if it comes through here, you take a stop. And I'm going to suggest everybody you just get over it because it's overhead and cost of production. Casinos pay the gamblers. And I'm sure they prefer not to. But, so this right here, this is your outside. So I know when it comes up to here and here that I have resistance. And I need, if I get short on this outside, I'm looking for something called mean reversion. I want to be short because I already squeezed out the shorts from the ETH, you see. And I got to what? My retail price. So now break. This is resistance. That is resistance. That is resistance. So for me, coming under here, this is a short. Now, if you can't enter it, then you don't have a trade. Look where we come back. Let's just look. There's your resistance. There's your resistance. So if you put this trade on here, your stop needs to be over here. You might get stopped out depending how far you put your stop from it. So let's just watch. Hold on a second here. Okay. Back to the overnight volume point of control. Sets up another short. See it? Did we get down here? Hold on a second here. Something's not making sense to me. Yeah, I think I made a mistake here, guys. The shorts, I'm in the wrong place. The shorts were down to here. Sorry about that. Too many. What time did we do this low? I want to make sure I got the right thing here. So it was here, down, pull back, down to there. Anyway, I think I'm in the wrong place. So this was your short. Here's a pullback. Here's your targeting, looking for it to go lower. I think I might have been in the wrong place. I really don't know. We get our buyers off of this location, come back in. Now, when this happens, I'm still looking for shorts at this time, even though I'm conscious of this. So I took some stops in here because I was trying to get short again. But when we came across here, then it was mean reversion trading. So then it becomes rotational trading, but I have to be conscious of this. Now remember, variable high volume node. Once I break above it and I come back right here. So this is my support and of course down here. So let's see what we get. So this up here is resistance. So we have support down here, support over here, resistance is up here, back here. See the behavior? Resistance is there. Let's see how far back we come. Support is here. So you can kind of see this. Let me open this up a little bit. So we get our V bottom, come back here, pull outside, right here, support, come back, and we're looking for it to come back here. Come back to this resistance, come back to support. So now we're in two-sided trade, and this is maddening because, so what you have to do once this is too low and the retail price or high volume is here, then we're looking for what's called mean reversion, outside in trading. Not here, not trading in the middle, outside in. And then where's the outside? Well, right now it's up here. Outside in. Outside in. And then outside. So you're trying to come back here because you already hit this. Back here. Support. Now, once you come above this, then it's game on. You're back in the range and you're looking for longs. And that sets up the 59.20 and possibly the ETH high and yesterday high. So let's look at that. And there's more. 9:30, we have something called the IB. Now remember, the top of the stream, we have a 67%-ish probability to take out the first hour's high. That's what this is. We also have a structured trade in the Trader Lab called the IB continuation trade. We have 59.20 as a structured trade. So let's look at this. This is a trade, and it's available in those 60 PDFs, and I go over it extensively in the library of webinars and streams that you guys can access in the Trader Lab. There's no cost to visit Trader Lab, of course. So let's look at this. Overnight VPOC. Remember, once we are above this, what is it saying? Let's look at the language. It is saying what was too high might underline be too low. So for me, this is a long, that's one, or I have the IB continuation trade, which is right here. I'm going to put a little line here for you, just so you can see the structure. I'm going to put another one right here. What I'm marking these little high volume nodes. So that's retail. This is an auction. The next one is an auction. The IB, this is a low volume node out here. So structured trade is either along here, and then you're going for this probability of 67% to take this out. So if you got long here, you're playing a 67% probability to get through here. So for me, it was a long here. Same reason it was just short at the top of the stream. Overnight VPOC. We tested it at the top of the stream. We went all the way down to the structure below, which was down here. Then we came all the way back around, took this out. Opposite behavior becomes a long. Long, 68% probability-ish. Past performance not indicative of future results. You got to vet these to take this out. And then we have 59.20. So long here, scale, support, break high, IB continuation trade, the entry is here, stop would be under here. Structured trade, the IB continuation, going for settlement, and here, next targets. And I still have a couple sitting on, but that's neither here nor there. I'm an optimist. So this was the next scale. And now I'm holding. And these are not recommendations. I'm going for yesterday's high. And the overnight high is also at the same location, ETH high. And there's a high probability that we will, there's a 91% probability, and you got to vet this, that we'll either take out the ETH high or low. Who knows? We already took out yesterday's low. So, don't know. But what's over yesterday's high? Stops. So this is my next target, yesterday's high. And I have runners laid out here. Not a recommendation, but that's the trade. And then after that, it doesn't matter to me. So where was the long? This is Trader Lab trading. I'm not saying it's pretty because it's everything it is, and what it is, it's trading. But the last long was from here for me, and in Trader Lab structured trades, this is a structured trade, but it's more advanced conceptually. This is the IB continuation trade. It's a beautiful trade. I mean, look at it. I mean, that's over 20 points. And you could be done with this trade here. Because in the sequence of trading in the Trader Lab, you put the trade on when it's vetted and you have an edge. And statistically, this is your target. And what was the probability for that you wrote down at the top of the stream? It's only about a 32% probability. So why would we target this? Here's something that is maddening. Well, the probability of taking out the ETH high, got to find it again, is, or the ETH low is about 91%. So what I'm doing is extrapolating, even though taking this out has a higher probability, because I didn't get under this, which was the big kahuna retail price, and I'm now over the ETH retail price, the auction, which is made up of participant behavior, and we're inside of yesterday's range, all says too low, coming out the top, too low. And if I'm over that one, then the next opportunity is the ETH high because of that 91% probability, and yesterday's high because there's buy stops. I'm just going to label this. Questions now. Thanks for your patience. This is Trader Lab, and this is what we do in Trader Lab. And I don't use indicators. Actually, there is an indicator. What it is the interpretation of the language of the market. So what I do, and you can learn this, I believe anybody can learn how to trade if you're in Trader Lab and you do the work. Not everybody can trade. It's not easy. And the part that's not easy is the emotional and being in a completely uncertain environment. So that becomes doing the work initially to extract the statistical edge, so you know you have a probability, same as casinos, and then dealing with your fear. And if anyone says they're not afraid, they're not, because we're afraid because we're wired for fear. We're not afraid because we want to be afraid. It's uncertainty. When you have uncertainty, quote, what do? Hesitate. And what's the saying? I'm not sure. Well, you'll never be sure in this business. What's the other term that retail traders use? I'm looking for confirmation. What does confirmation mean? To be sure. You see what I'm saying? I'm looking for confirmation. You got to actually take these words and dig under the hood. What does that mean? It means fear. It means you're in an uncertain environment, yet you want something different that you can get from this environment. You cannot get certainty. You can only get maybe. Maybe it'll get here. Maybe we'll test the settlement. Maybe we'll get over the value area high. Another target, by the way, which is posted in Trader Lab. And maybe we'll take this out because of the probabilities. And maybe we'll take out this high. And maybe there's more, or maybe not. That's what I know. So In this trade, this right here is resistance. I have to clear this or I can rotate down. And this trade can fail like any other trade. So how do you manage your trade, you're asking? It's a great question. Every trader has to find their own process that fits with them psychologically. For me, being above this, and these aren't recommendations, I'm as clueless as everybody, and this is the outside edge of a consolidation. There's going to be stops under here. It's an edge of a consolidation. So we can come out here, pick these guys off right down here. And if we pick them off, come right back inside and then come back to this. This is the retail price in this consolidation. Stops are on the outside edge. That's what you get at consolidations. Buy stops are up here. Retail is here, too high. Where's too low? Wouldn't we all like to know? So we look out here, and let me draw a little box for you. You can kind of see what this looks like. All I'm going to do is frame this. And what you're going to see is this is where the sellers are. This is where the buyers are. There's the low volume node. There's the exhaustion at the high of the day. The retail price is here. If this is too high in this auction or structure and we come out under here, then we can take these stops of these trailers, like us, take them out. And if we take them out, then we have to see the behavior because it might be a continuation long, or this is the high of the day. And we don't know the answer. 948 selling icebergs. That's nice. Questions, guys? Thanks for your patience. Now I can look up. No, if I see resting iceberg, no, I don't see it that way. Because this guy hasn't executed yet and he may cancel. We don't know anything. What we want to see is if there is resting liquidity, the behavior, if we get absorption, and then what's the behavior? So no, this is not the same thing as Friday. Thanks for asking. Support and resistance trading works in futures. It doesn't work in Forex. Well, Mike, I don't know. It certainly worked for me for many years. I traded across all asset classes. It depends how you define support and resistance. The auction is really more price discovery. And support resistance depends. I don't know. It depends what you're calling support resistance. I don't use standard support resistance. Everybody, it's all retail traders, and I'm not referring to you, but most retail traders, what support and resistance? The recent high, is this resistance? Well, yeah. Where's support? Down here. What am I going to do with that? I'm not doing anything with it. The thing is, the markets are based on an auction of what's too high, what's too low, and it does it in all time frames and fractals. So this is just a fractal. So what's too low here? Well, out here. What's too high? Up here. Is this support? Is this resistance? I guess it is. If I'm trading currencies, do I use support resistance? Of course. Currencies tend to trend. They're a bit different, but not really. All markets are really, the foundation of all markets is trying to figure out what's fair and unfair. So it's really a matter of time frame or fractal. For me, I try to get on a trade. Like being long from here, I'm still long. And it doesn't mean anything. My primary target is this, because I'm trading volume to volume. Now I'm trading to stops, which are up there. So this is my next target. I have another target before this one. And then once it blows through here, I'm done with the longs for me. And it doesn't mean if I had more runners I wouldn't, maybe go further, but I don't need to for my trade. From here, right now, got a pretty nice gain in it anyway. So the idea is everybody, what you have to do when it comes to markets, any market, whether it's currencies, this, NQ, you got to vet. You got to see, you could trade any asset class with this. It doesn't really matter because this is really based on how markets work. It's not based on anything else. And the way the markets operate is generic. It is an auction. So, and the reason the market rotates and does what it does is it's trying to find participants on both sides in all time frames and fractals. Now, we have to be conscious of this guy. Look at this selling iceberg. You got a big seller here. This might, and we don't know, is this the high of the day? Or are we just going to blow out some longs, which we might, and then come back later or never? Don't know the answer, not our job. So the answer is trade plan. Because if you accept you're in a random environment, you really have nothing to do. All you have to do is sit and wait. So what I do, and this is not a recommendation, if I know this is the outside edge and I can come back under here, my stop is not going to be, I don't micromanage my trade. And yes, I do give MFE back. But with the runners, I kind of look at them a little differently because I'm going to give them more latitude. Because if I'm sitting long in here, even if I tuck my stop out here somewhere and not here and not there, because there's stops clustered here, if I'm further away and I give back a bunch of MFE, I'm still long from here and actually down here. So there. Okay. So I just accept that. There's no precision. Anyway, that's just me. I'm not saying anybody should do that. Other traders are going to be trading this. Short to here, long to there. I can't sell this, so I can only buy it until structure changes. Does that make sense? Yeah, Jay, very good. That's a good post in Trader Lab. You'll notice why there's no shorts, right? See if I get another scale here. That would be joyous. So this is the auction, guys. And this is pretty much, and there's the ETH. There it is. So I'm going for this. Not a recommendation. Now, I would be flat after that, but we also get this. I think that's accurate. 59.42. Barry, you're asking about the stats. No, the stats don't change. They're based on, and this is available in Trader Lab, about 953 days, and they change based on where we open, the opening type. Do we open in range, out of range, that kind of thing. And based on the statistics over almost 1,000 days, it gives us probabilities. Now, the thing about probabilities is it's not the number one input. The number one input is the auction. In other words, the levels that I showed you, at the top of the stream. This is not including today. This is yesterday. This 76 is the higher time frame level below us. 20 is the level above us. If we come out above here, we have a gap up here, I think. So gap high, or I should say the low of this gap. So this is my next target, 31.50 and 20. Let's come back. And this is the screenshot that I took. There's the low. Here's the 20 target. These are the primary trades. And if I can get to the ETH high, I got this, which may or may not ever happen, right? As you know, this is trading. So let's come back here. I have not gotten over. I got a lot of iceberg selling. 3,000 went off here. That's meaningful. And now I'm hearing, you might say, selling. So I'm trying to get here So if this doesn't happen, remember where the stops are. They're under here. So, and all I do is if I get taken out of my final runners, I'm still long from here and here. And that's part of the price you pay for shooting for this. Then the long is over. This might be the high of the day. I'm not saying it is. Doesn't matter. I'll be out of my trade. And I am right out of my trade. That's it. I'm flat. Trade's done. So this right here, you see the high volume? There's the support. There's the resistance. Here's the break. Now let's look at this. Outside edge, naked volume point of control. Let's watch this area for retracement if we get one and see what happens here. Not a trade recommendation. We're going to look at the structure. Now we're going to see. Do you have questions while we're waiting on this? Alexander, there's no such thing as late entry. It's either vetted and you have an edge or you don't have an entry. It's really all this business is about. Let's watch. So now we've fallen out of this distribution. The low volume node is here. This is resistance, which aligns with that right there. I'm going to label it just so you can see it. When I'm trading, don't have time to do a lot of labeling, but I know what this says. So this is a consolidation. We fell out. We got our stops. We came under here. Now we're coming back inside. What we have to see now is, can we get back above the high volume, or does this set up as short? Not a recommendation. So let's see what it does. Outside edge, high volume is there, high volume is there. So we have resistance, where right here is a key location, naked volume point of control, which we closed. If this price now is too high, then we can mean revert and come back down the pole. Let's see what it does. And this is, remember, this is not a trade calling room. I take stops. Everybody does. So can't avoid it. Cost of production and overhead. Now, the other thing is, if this is not a trade that is vetted, then you don't have a trade. You're a tourist. You're waiting, because this is a very key moment here in the auction. How are we doing in YouTube? Please give a thumb up if you're finding this interesting. You're all invited to the Bookmap Discord Trader Lab. There's 60 PDFs of these structured trades you can download, a library of webinars, and of course, there's no cost. In addition, we have a special series on funded trading companies, how to do it, from experts and pros on how to use funded accounts, how to operate with them. You might find that interesting. That's happening every day this week in the Bookmap Discord server. I suggest, if you're interested, check the times for the special events. These are available exclusively in Discord for Bookmap Discord subscribers. You do not have to be a Bookmap subscriber, though there is a free digital version you can download at no cost, but there's no cost to come to the Bookmap Discord Trader Lab community. So I have no short. What happened here is they came out, they took the stops. There's no way to know how deep it'll come. See how we came under all this? Yeah. No way to know. So When we come above here, what are we doing? So that was stops. Micro high volume structure is here. So I don't have anything to do, but when it breaks above here, this can be along here. But this is more scalpy now. So I don't take this trade because I'm more for the larger swings. I don't want to start fiddling in here. This here, so this is microstructure. Let me just show it to you. This is my location. That's important. I break high. I test it here. So this sets up a long if you want to. And where's your resistance? It's there. So you don't have a lot of range. So for me, you know, by the time I get in and do all my stuff, it's maybe 3 points. Now, 3 points fits. That's like using a shoehorn for me. Because what I do, if I break here and I have my structure right here, I have to put my order, my limit 1 or 2 ticks ahead of this. And my scale needs to come, is right back there. So I got to have my scale 1 or 2 ticks above this. So it'd be long here, scale there. I don't know if you want to bother with that. That's trade plan specific, but the behavior is auction based. So this behavior up to here, high volume, naked volume point of control, retail from yesterday. Now in the developing time frame, retail today in this distribution. So if I break above here, check it, I can come there. If I get above there, I'm back in the gravy train. If I don't get above this, then there's trouble in River City. It's if this, then that. If not, then what? If this is now too low, buying structure, stop has to go under there. Then back to this, which was too high. Same process. So stop under here, long here, scale there, helmet on. Got to get above here or else we're going to rotate down. If I clear this, then I can come out potentially the high of the day and continue to target, which is this. This is trading. I'm not saying it's going to do that because I can't. What I can tell you is it might. And that's all you got in this business, maybe. Does that make sense? You guys getting something out of this? So the thing with the trade, any trade is, it's maybe. So there's no predicting. So with the auction, when it comes down here, we don't know anything. At least I don't. So, but when I break here, if I wasn't streaming, I'd put a long on. And then I'm back in the same trade. I just got taken out on a counter rotation. I get annoyed like you do, and I put the trade on. That's trading, not anything more, because you can't be certain. You're in an uncertain environment. All you can do is follow a plan that has a statistical edge. You're playing games, if you will, the same way the casino does. They don't make them up. They don't know the outcome of any hand or anything else. They just have their games. Well, and they pay the gamblers. They buy the cocktails and give you the ticket to the buffet. And if you're a high roller, maybe even to see Adele. So what are we doing? We're in the same business. We pay the gamblers. We take stops. We get taken out of trades. Whatever happens, happens. And if you have a statistical probability, you're aware of it. And you just are saying, okay, where's my next trade? Well, if you have an edge, your next long is here. There. You hold this. This is support. You could keep your stop down here. You'd be risk neutral. You'd have this much in the trade. You keep your stop down here and take a few burgers to the bank. If we take out this high, and who knows if we will or not, you know, nobody knows. So we have to clear this volume and get out above here, actually, right above the high. Take out the high, which is the long side trade. What are we looking for? Back for yesterday's high in the ETH high. It's the same trade. So the long I had from the IB, which was wherever it was, can't remember. Where's the IB? Been a long time ago. 5901 was the last long Trader Lab structured trade. If you got taken out Or, some traders in Trader Lab are not going to move their stop. I tend to be a little more, move the stop oriented, and I get taken out. This trade doesn't fail until it comes all the way back to 59.01, the entry. So for me, and again, this is all a function of your time frame or fractal that you trade in psychologically. See, if this came all the way back to the 59.01 after being up here, 27 points, I would have more than indigestion. So I can't deal with that psychologically. I'll still get taken out, but then I'll just put the trade back on again. Here, this is the long. That's a scale. And then it's wherever. Is everybody with me? This is Trader Lab. And the thing about Trader Lab, it's a community of like-minded traders who come together to leverage their collective experience. You'd be surprised. Trader Lab, traders are doing different things. Some traders are bobbing and weaving. They'll trade very short term because they're using the same process, but they've sliced it into fractals. This is what a fractal is. It's just a function of rotation. That's what a fractal is. It's rotation. Well, some traders are trading a large rotation, like the day, and it's all the same. And here's the other piece. Remember the low of the day, right? Seems so long ago. This is called mean reversion. The outside in is to here. This is the mean in the intermediate time frame. It's a little bit too much for me to go into, but the market tends to check volume. When we went up to the overnight volume point of control, we reverted to the mean in that time frame. We then went down to the mean in the higher time frame. Let me try to show you this. So market opened lower, right there. We went up to the mean, and yesterday's low filled the gap. This is the mean from the ETH. So we reverted to it. We then got a short. We filled the gap. We got a short to where? Follow the idea. You'll learn a lot about market mechanics. We check the mean in the intermediate time frame, higher time frame. So too high, short, to here. And then if you get below, put on your flak jacket and a helmet. What do? We reject it. What does that do? We come back across, and then it's back to here. Once you get above here, then it's long. To where? To 20. To here. And if we get above here, then it sets up a squeeze to here. Is everybody tracking? That's as complicated as this is. Now, as far as the higher time frame picture, the other piece that's complex for us is where do you enter and exit? How do you do it? Well, that's what this is all about. So for me, I was trailing. I got taken out actually over wherever it was, not too far from here. Then putting the trade on is here. So it's a long again, just to continue on its merry way towards statistics. Any questions, guys? Huh. Did you guys get something out of this? How about a thumb up in YouTube? Leave a comment. Let me know if this is making sense. By the way, if you haven't seen it before, it will not make sense because you have to change your thinking from an indicator translator, which is really what an indicator is. It's a translator, okay? What I'm doing the same thing, except I'm the indicator. I'm not relying on some software product that reads something, a price base. Now, I do use order flow. Very important because I can see there was absorption here. 391 stops came out. Really? Is somebody picking the high of the day? Did you? Not me. And they're done that. Let somebody else pick the high of the day. They deserve the rewards. Meanwhile, I'm going for this. Let's see what happens, okay? Now, it doesn't mean we won't rotate. You see, it's fractal. So this kind of thing here, I was anticipating it. What I can't tell, of course, is how far. That's the joy of randomness. But what I know is the auction. So once this happens and I see a consolidation microstructure right here, 446 sell stops come out. Thanks for playing. This is when your broker sends you a gift basket. And then you get the extension. There's your buyer. Where am I? I'm above here, and I get above the low volume node, which is out here. This is the long. Stop is here, and it's palatable, couple of points, and then you're here to scale. Pull back here, support, microstructure, support, support, above, microstructure, support. All you see how the structure and how the market's behaving with the structure. Too low, break high, microstructure. Buyers are here. Break high, microstructure. Little microstructure. This was resistance, becomes support. Microstructure. Too low, structure. Too low, break high, structure. Too low, break high. Too low, structure. Too low, watch. This is a way you, and I'm going to do a special webinar when we get volatility that, and a lot of examples on trade management. Remember, this is our target. Now I can't put this trade back on when I'm streaming. So this is my trade here. So again, left at the altar, huh? Another 10-point trade. So I'm going to ask you, if you're in YouTube, if you're looking for action, then Trader Lab is maybe not for you. What we're working for is profits. Building a business, not a video game. So, and I know a lot of traders come to trading because they basically think now they have a really nice video game where they can get paid. They tend not to stay in the business because this is not that business. This is not video gaming. Gaming is fine. This is not it. The Trader Lab is about building a business, understanding the business. What is this business? How does it work? Remember where our next target is, up here. And then if we get through here, we can squeeze some more. So for me, the long is up in here, and it's done up in here. Can you guys see the rationale for how this might work? Yeah, Ryan, you're welcome. Please give that thumb up in YouTube. Hit the like. Leave a comment. How's or taking the break to stream? No, it's not helpful. It creates conflict because I'm not taking trades that are my trades. And, when you leave 10 points or whatever on the table and like this 21 to 30, whatever, plus runners, it has an impact. It does, but I choose to do it. I don't know how long. I'll continue. But while the Trader Lab's available and there is no cost, I suggest those who are interested in this methodology. I've got 45 years of trading, so I'm not a newbie. So I've been there and done that. Most of everything most retail traders have done, unless it's something, I started in 1980 and indicators were just coming in with Wells Wilder. We just had the technology. There was no internet, no PCs, not a zippity-doo. So that's when I started trading. And so just saying is I've been through the development of most of the ideas, many of which I embraced and worked with because I thought they were good ideas. And built trading systems, real actual systems, did a lot of different work over many years and worked with some very talented people over the years and made every mistake that everybody makes. I mean, we're all the same that way. The difference is most developing retail traders get started on the same path. I've already walked there, been there, done that. And most of the retail traders, or I should say off-floor traders, because when I started, all my buddies were floor traders. There really weren't off-floor traders when I started. So I was very much in a vacuum. So my learning curve was really very slow. And I would stick with things because I thought it was persistence. I didn't understand gaming. I thought it was really about predicting and getting confirmation and certainty, right? Same thing you guys do. It's all normal. It's standard behavior. Um, so where's our target, right? You could be done with this right here if you want and just cash your chips, as they say, and you're done. Go to lunch. Or you have a runner sitting, maybe one, they call that the Hail Mary pass, and you're going for this. Or you're done. Doesn't matter. So what I found was the fallacy that I found for me, and it's probably just about everybody else, is everything works randomly because the environment's random. So when we get something and it works and we have winning trades, then we think it's just make it better. So we stay in doing something that does not have a statistical edge, but because of its random outcomes and it wins at times, we just think it's tuning and tweaking. I did a webinar on it called Trader Groundhog Day. It's available. You guys ought to all watch it because that's what keeps us stuck, waking up doing the same thing. Everything works at times. You could just randomly hit buy or sell, and some of them are going to win, some are going to lose. Same as when we put a trade on that has a statistical edge. Some win, some lose. The idea of an edge is over time you expect the dollars from the other side. Same way a casino operates. That's kind of the business we're in. That makes sense. Any questions in YouTube? Don't forget, guys, there's a special series of streams going on exclusively in the Bookmap Discord server. You can access that through the link in the bottom of YouTube. It is Funded Trader Webinar Series. It's through the end of this week. You can learn tips and tricks from the pros and how to access funded traders, what's the pros, what's the cons, how to actually succeed and pass your evaluation and be able to leverage and use their dollars to build up your trading capital. So if you want to become an independent trader, it's a path. When I started, we didn't have that. When I started, you got your checkbook out. Surprised I didn't get my hand bit by that checkbook. But this is available. There's a link in the bottom of YouTube. You can access these streams, this webinar series. It's only in Discord. I suggest if you're interested in becoming a funded trader, there's a couple pieces. Number one, have a trade plan that has a statistical edge. Understand the environment you're operating in. Come to Trader Lab, download the 60 PDFs of structured trades. You might want to incorporate them into your plan. These are trades that I've actually taken. They're real. You can see the trades and whatever else is in here. Explanation, counter trend trades, all kinds of wild stuff in here. And it's all available at no cost. And you can just see these. But I think the idea of Trader Lab is not to do what I do, but for you to understand how the market works, why it does what it does, and then extrapolate structured trades that you can then find an edge. And then when the trade shows up, your job is to interact with the other participants. So you'll find these interesting. Anyway, there is a link in the bottom of YouTube. If you're interested in these, they're available at no cost, as well as the library of webinars in the Trader Lab and the Trader Lab community. So you understand the Trader Lab community is a serious community. It's not romper room. It's about business. If you're interested in the business of trading and career building and potentially a career path, and your mileage may vary. Past performance is not indicative of future results. You can join the other traders in Trader Lab who are building out their business, and those that now are successful who were just treading water or losing previously. And again, trading is not for everybody. It doesn't matter if you find the Holy Grail. You have to be able to deal with your emotional states. We spend a lot of time on that in Trader Lab because the most overlooked and minimized obstacle is dealing with your primal wiring, which is to run from danger. And that's where the things like confirmation, certainty, all that is wired into us. So we build our trading based on those needs. I'm looking for certainty. Well, maybe instead of one indicator, I got 12. And when all these line up, or most of them, and sometimes it's this and sometimes it's that, then I'm going to do something. What does that do? You can't measure it. Is that what you're doing? Because that's what most retail traders do. And most retail traders, as you know, don't have longevity. There's a good reason for it. So one thing is, think like a retail trader, but don't act like one. Don't do what they do. Understand what they do, and don't do it unless, of course, you're successful doing it. And successful doesn't mean that you've had a little run and now you've had 5, 6, 8 winners in a row and you're profitable and then you give it back. That's not what this business is. If that's what's happening to you, it's just random. Yet we think that we're on the path. Let's make it better. That's Trader Groundhog Day. If you're experiencing that, come to Trader Lab. I think you can do better. Now, can you do better? That's up to you. But you will have the support of a community. We've all been there. We've all done it. And our senior trader has over 50 years experience. I have 45, both professionally and also individually out here in space with all of you. Been there, done that. And I've worked with some very high tier traders, hedge fund traders, quants, and the rest of it over the years. So I think I have somewhat of an interesting knowledge base. And I'm all about sharing it, but also keeping it simple. Trading doesn't have to be complicated. It's actually simple. The problem in trading is randomness. So let's not make it complicated to try to conquer randomness and uncertainty. Simplicity gives you the opportunity to operate in uncertainty and randomness. It's the opposite of what we think it is. We think complexity gives us certainty, whereas it's actually simplicity creates more certainty because we can define things in a very conditional way. If this, then that. If not, then what? If this is too low, if this, then we lift off, then that, then where to? Here. If not, then what? Then back here. It's that simple. Does that mean you sell this? No. What it means for me is long only because I have a statistic. And I have buy stops sitting up above here. And there's a lot of fuel up here. So I know if I come out here, they can really accelerate. And chances are, if it is going to happen, it'll happen in the afternoon. Because volume tends to dry up and we tend to counter rotate around lunchtime. This is Central Standard Time, 11:49. I got about 10 minutes left. You guys have questions now. It's a great time to post them. Um, hmm. Ding, if you want to, I'm getting a question in YouTube. Thanks, Ding. On Boomer, I'll be right with you there. Bookmap. Yeah, well, the best way to get statistics if you don't have Investor RT, which is what we use to generate these, it's not the only way, but it's very efficient. It's set up for that. Come to the Bookmap Discord Trader Lab. That's the best way to get all the tools. You know, and I would recommend not only the statistics, but watch the webinars. The primer webinar I did, it's about an hour long, gives you a high level overview of this process, concept. And it's got about, 30,000, 31,000 views. I'm not a vendor. There's no cost for this. I'm just like you, except I've done it longer. All this material, the library of webinars, the 60 PDFs of structured trades, the statistics, and the community are all available. There's that link in the bottom of YouTube, and you can just have to verify your username and email to get access to the server. And don't forget the special series on becoming a funded trader is available right now. It's taking place, and you just check the schedule. It's for the rest of this week. Notice where we come. This is just structure. That's all this is, not a recommendation. So what's too high up here? Let's just follow the yellow brick road. Let's see if this makes any sense to you guys. And Boomer, I'll be right with you. I just want to get this. So let's come back. This was resistance. This is support. This is resistance. Break low. Take it out. Nada. Up here. Break low. So resistance now is up here. Support is there. And I'm still above here. As long as I'm above here, I'm only in the long side. If I see a short, I am not fading it. I'm only taking longs. So I know in fractals, now this is fractal. What is fractal? You're asking me. What are you talking about? Microstructures. Everything is like a Russian doll, Matryoshka dolls. They are inside of each other. This little behavior here is its own little fractal. Right there. Chop, chop, chop is an auction. Too high, too low, right there. If I break away from it, then this is now too high. That is too high. That's resistance. This is resistance. Where's support? Well, it came back here. So let's look. Where's resistance in the microstructure? Right here. There. So I can keep taking this down. Now, I'm not saying anybody should. I can slice this down from here to back there, where the sellers took over, which would be here. So I could be taking along here. Here's the microstructure coming up, and I'm doing something. I don't trade like this. All right. I mean, this range doesn't suit my trade plan. But for some traders, they would buy this and they'd be targeting this. Not me, but, let's watch. Not trade recommendations. The thing about trading is you got to have an edge. So let's just watch. And these are not trades, guys. Don't do that. These are not trading. I'm only reading the auction to you so we can read it together. I'm above this. As long as I'm above here, I'm only thinking longs. Okay? Not a trade recommendation. You don't want to take my stops. I don't want to take yours. Boomer. How do I see the order flow of the two big orders, 11, 7, 11, 17, 11, 20? All the way back here, Boomer? I'm not sure what you're asking me. In here? 11, 17, 11, 20. You're asking me the order flow of two big orders? How do I see? I don't know what you are referring to, Boomer. You might be talking about these, I guess. I don't see anything there about that. This is what's interesting to me. This. Absorption. Break high. No, I can't. I don't know what that is. Final questions, guys. I got about 5 minutes. Boomer, I'm sorry if I didn't answer that clearly. Gumit, there's all kinds of videos on the Bookmap site, and also every day there's specific streaming on actually how to use Bookmap and how to read it. Okay. I typically do a lot of that, but today I wanted, I kind of shift around, because when you have a high tier tool like this, you can read this, but this is where you see the change right here. So we come to a location and it looks like it's going to zero. Why did it stop here? Isn't this a great question? Because these sellers were absorbed. Now, we don't know until we break high that this is too low. This is an auction. So now it's too low. So the order flow with the structure, and we're under this. So that right there, that's a problem. So when I see the buyer here and I break above this and test it against this microstructure, there were sellers here. They were absorbed. Aggressive buyers there. This is the long. So that's the long. The one I didn't get to take. And then you scale and you're coming here. That's the trade. So let's watch. As long as I'm above this, I'm all good with being long. Now, I'm not saying that's a good trade or a bad one. I have no clue. Not my job. My job is to read the auction and then read the order flow at levels that are material. The order flow here shows absorption. These buyers got absorbed. There's the sellers. There's the pullback. I had a buyer there, absorption, got thrown under the bus. Test, sorry, Charlie, Charlie the tuna, down you come. But I'm above this. So when I'm looking at this, and I'm only talking me, it's not a recommendation. I'm only taking longs. And if I'm trading this, I'm only taking longs. And if I fall back under here, then I'm going to go, maybe I ought to change my idea. But as long as the market, just the fact there's a counter rotation, unless this is my time frame, I'm not going to fade this. It's like saying, let's pick the high of the day. Now, I know there's some traders who seem to do it all the time, except let's use the term, I'm going to be generous, nonsense. Nobody picks the high of the day. You can certainly buy the high of the day, but as far as selling the high of the day, different thing. Seller is here. Now, the thing is, you got 350 going off here. This is like Pac-Man. And notice where we're coming, where the buyers were here and we broke below and we tested. That sets the downside rotation. The sellers are here, right back at this level. Now, the question becomes right here, can we clear this? If we can't clear this, then we can rotate. That's what I know. So if, subject to how you trade in your time frame, well, for me, the long is here. So then you're just going to hang out. Or you're going to just, when it breaks here, you get out of the trade and you forget it. It's all a function of your trade plan. I hope that makes sense, guys. I want to remind you, Funded Trader webinar series taking place. Use the link in the bottom of YouTube. There is no cost to access the Bookmap Discard Trader Lab. Take advantage of the 60 PDFs of structured trades you can download. Watch the library of webinars. All this is exclusive for Bookmap Discard Trader Lab participants and, of course, the Trader Lab community, and you get access to this. You don't want to miss this. Hope you guys got something out of this. Please leave a comment in YouTube. Also, a thumb up and a like, and subscribe to the channel. If you're interested in Trader Lab, you're all welcome. There is no cost. I'd look forward to meeting you in Trader Lab. And remember, trading is a business. It is not gambling unless you choose to sit on the gambler side of the table. I believe anybody can learn to trade. Whether or not you can trade is a matter of doing the work, generating a statistical edge, and then executing that edge. Same as the casinos. If you're up for that, click the link in the bottom of YouTube. Visit the Bookmap Discard Trader Lab community. Otherwise, good luck, and thanks for visiting the Trader Lab. Appreciate it.